Well, hello everybody and welcome to your Calgary real estate market update for December. We're going to share with you a little bit of what's been making the headlines recently, some really great news for the Alberta economy long term, and then we're going to dive into the sales stats where things aren't quite so hot right now. First, let's look at some headlines. We're starting to see trends emerging now everywhere where it's basically the condominium component of the real estate markets that seems to be the albatross around the necks of the Canadian real estate industry here right now. You know, they were very popular during the boom years for investors to get into real estate investing easily. Very small deposit would secure you your purchase price. You could sit back while the units were being built and watch the values increase. And then sometimes you wouldn't even have to take possession. You could just flip these units to an owner-occupier and make a lot of money in the process. So way too many people jumped in and did this. And it actually ended up changing the way that condominium projects were developed and financed as well. They became so popular. So one of the reasons why the condominium segment of the real estate market, not only in Calgary, but across all of Canada, is in such a tough spot right now is just the units themselves, the real estate has changed so much since the mid-90s. So you can see here dropping lots and lots of square footage on average. Units are much smaller. But in addition to that, how these projects were financed. So investment condos become so popular that developers are now saying, okay, we can get almost all of the financing we need for a building if we can sell all of these units to investors. So let's give them what they want, rental-friendly type of product. You can see here, if you got 70 to 80% of the units being sold to a new buyer, then that gives the developer the financing that they need to go and build the whole project. And so you'd get these flashy show centers that would be popping up, these investors eager to make a quick dollar with not a lot of work would come in and sign up to buy these units. And that would give the developer the financing that they needed. They would get the loan from the bank and then off they go. And now what we're seeing is this avalanche of supply is hitting the market, there's just are not the end user buyers there for them. They don't want to live in these small units and they don't want to pay these exorbitant prices to do so. And so that's going to be a really tough thing for the Canadian real estate market to get around. And it's not just limited to the GTA or Vancouver. We're starting to see that in Calgary now. Okay, and more on that a little bit later. But first up though, a bit of a lighter note, start to see some cool demographic trends here, where millennial couples are getting into non-romantic partnerships to buy real estate. So this is not all that different than investors joint venturing on something to get into a deal. Now we're seeing this on consumption real estate as well. I thought that's kind of interesting and a great way to break into the market if you're having trouble doing it. And then also home buyers using wedding registries to finance their down payments. Also a great move there. So for any young couples getting married, go ahead and put on your registry a few bucks for the down payment. I think that's a very smart and shrewd move to get started young in life and in real estate. Okay, so here's the big news in Alberta lately. We've got this agreement now between the Alberta government and the federal government to help open up our oil and gas industry here in Alberta. So Prime Minister Carney's finally seen that if he wants to have all of this spending, he's going to have to find a way to pay for it. And that means unlocking the energy wealth that we have here in Canada. So this was great news. Lots of talk though, right? We need to see this thing actually get built. But it means that we're removing a lot of the Trudeau era obstruction type of regulations that prevented private enterprise from coming in and building pipelines or increasing capacity of existing ones. So Carney's come in and said we're doing away with all of that and paving the way now for hopefully a new era in Canadian energy here in the years to come. So we'll watch this closely here and keep you guys updated as all of this unfolds. And so this, of course, is helping out Calgary in a big way. And even though we're in a recession right now and the stats right now are really not good at all, we're starting to see the light at the end of the tunnel here for the start of the next market cycle. Okay, so Calgary's positioned to be Canada's top real estate market amid transitionary 2026. We'll start to see all of these forecasts and reports coming out in the next month or so, but Calgary's positioned to do very well. And not just because of oil and gas, all right? The economic downturn from 2015 to 2019 resulted in calls to diversify our economy. And so in doing so, we tried to attract tech companies and other types of industries to Alberta and to Calgary. And that's where a lot of these jobs are coming from now. We're reaping the benefits of the seeds that we sowed during the economic downturn. So we're seeing stuff like nuclear power now being talked up, all right? So this is to power AI data centers in the northern part of our province where it's nice and cool. We can keep the data centers cool. We can power them with nuclear energy. I think this stuff is just fantastic. Big projects like this are great for the long-term health of a market like Alberta's. So I'm really pleased to see that. And wherever you're at with respect to the privatization of healthcare, it will be an economic boom for the Alberta economy, because we will see people move here or come here to take advantage of the two-tiered healthcare system if it is in fact rolled out by the Smith government. And in addition to that, we'll see lots of great doctors that are looking to move here to start new businesses and to work and build their families and businesses here too. So that's all really good news, I think, and creates a good outlook for us for how we're going to get out of the mire that we're in right now with respect to the sales statistics. Okay, so the actual market data, not so hot right now, but there's some stories in here that we've talked about previously that are really relevant now and will be relevant as we turn the corner into 2026. So last month, October's data, average sale price just under 570,000. We're still slipping here now to 559,000 is what it was based on November's data, okay? You can see here, though, we have this complete decoupling within our real estate market of freehold, non-condo properties and condominium properties. So detached and semi-detached are not really down all that much from where they were this time last year, but row units and apartment condos are down so much to 6% and 7% from where they were this time last year. So that's a big drop from where it was, and I think that's what's holding our market down and dragging down the overall prices. Now, this is a new graph, okay? I've not shown this one to you guys before. I actually used AI to make this one, and I felt very smart when it came together. But what it does do is show you that we're nowhere near the bottom here right now, okay? We've got some pain to take here. So what this graph is showing you the sales to list price ratio. So what that is like the closing price on a unit relative to the asking price. What percentage is that, okay? And you can see here that since the spring, it's just been getting wider and wider and wider, okay? Buyers are hammering on sellers hard right now, and sellers are giving it to them, all right? They're giving them this equity when they're coming in on deals. And so until we start to see this trend back up and the ratios get closer, right? So that would mean sellers pricing their units in the right spot to get lots of buyers coming in, so that our purchase prices are closer to the asking price. Until we start to see that, we're not going to see prices start to elevate again, okay? So this would be the cutting edge statistic, I think, about when we'll see our market change, and I'll help you with this one in the months to come. We'll follow it on close, and you can see here it kind of mirrors that, right? If you look at the blue line, that's the average sale price since the spring, all right? So if you look back here again, sales to list price ratio is getting bigger and bigger and bigger as we go from the spring through till now. And you can see here with this blue line, our prices are just dropping all the way down there along the way, okay? So the bottom has not yet arrived. We've got some more pain to taste here in Calgary. You can see here the month's worth of supply. We're solidly in buyer's market territory. We've been there for a while now. After a long stretch in an even market, we're in buyer's market territory. But again, you've got to look more closely at the specific asset classes, right? So looking at the months of supply for detached, it's pretty even, all right? You're shopping for a detached house almost anywhere in Calgary, you're going to have pretty balanced conditions, but apartment condos are not the same, okay? Row townhouses in the east end of the city and northeast are basically the same as condos, half a year's worth of supply out there, so saturated for those particular asset classes. And taking a look at this one, this is the benchmark pricing according to these different asset classes. And I take a look at the apartment condos here, okay? They're just so clustered together. I was saying in front of our agents at our sales meeting that apartment condos in Calgary are like Big Macs stocks, okay? They're the same everywhere at present, all right? So this is just a result of the oversupply and of newer product all over the city here right now. But looking at the detached market, you can see pricing is going to vary depending on the area of the city that you're in. So good health there, lots of different options throughout the price range of the detached segment. Same with the semi-detached part of it. But again, we've just have so many condos right now. That's what's pulling our market down. Okay, so that's our last market update here for 2025. Looking forward to getting in front of you guys again here in 2026 with our outlooks. Thank you very much for your support throughout a fantastic year. I hope you guys have an awesome holiday season, and we'll see you next video.